total income is nothing but from the gross total income when we deduct the deductions under section 80C to 80U, the remaining concept is called total income. Amounts not credited to P&L account but are taxable under the head profits or gains from business or profession. Remuneration or salary received by an individual who is not a citizen of India. Warm welcome to 5th Sem BCom student. The subject we are discussing income tax law and practice, unit 1, basic concepts of income tax. In today's session, we are going to discuss about gross total income and total income and the format for computation of total income. I am Professor Rajesh L.R. from Department of Commerce and Management from Vidhyaashram First Grade College Temple of Excellence, MYSURU. The concept what we have studied in earlier session, it was assessment year, previous year, and person, assessee, agricultural income, mixed agricultural income. So a person is nothing but, according to section 2 subclause 31, an individual, a partnership firm, a company, association of person, body of individual, artificial judicial person. Assessee is a person either directly or indirectly who is liable to pay tax as per the Income Tax Act 1961. Assessment year is a year where we are going to assess the income of the assessee which has been earned during previous year. Previous year is a year in which the assessee has earned the income. For us, current previous year is 2023-24. And today's agenda is gross total income and computation of tax liability exempted income under section 10. What is gross total income? Gross total income is nothing but the total income of all the 5 heads: income from salary, income from house property, income from profits or gain from business or profession, income from capital gains, and income from other sources. So all the 5 heads taxable income will be totaled here. The total is called our gross total income before giving any deductions under section 80C to 80U to the assessee. Gross total income means total income computed in accordance with the provisions of the Act before making any deduction under section 80C to 80U. So every concept which has been computed, either income from salary or income from house property or business income, profession income, capital income or any other source income here, that as per the Act of 1961 and its provisions. The next we have here total income. Total income is nothing but from the gross total income when we deduct the deductions under section 80C to 80U, the remaining concept is called total income, the taxable amount in the hands of assessee. How do you compute the total income? The first part we have here, income from salary of assessee, income from salary, add taxable income, add taxable perquisites. Perquisites is nothing but additional benefit given by the employer to his employees. So now it is going to become gross salary. Gross salary minus deduction under section 16. The standard deduction what we have here as per the norms, 50,000. So 50,000 will be deducted and professional tax will be deducted, and the remaining part is taxable income from salary. For income from salary, taxable income from salary, income, the basic pay, and add allowances and add perquisites. So we are going to get gross salary. From the gross salary, the deductions, whatever we have, after providing the deduction, whatever the amount remains here, that is our taxable income from salary. So next we have here income from house property. Net annual value for the let out property, and for self-occupied property always it will be nil, and self-occupied property for business or profession, it is taxable under the head of profits or gains from business or profession, and it is not taxable under the head of income from house property. So net annual value, whatever we have here, on this net annual value, so there will be deduction under section 24, 30% of NAV. 30% of NAV will be deducted, and taxable income under the head of income from house property after deduction of 30% NAV. If any loan has been taken for the purpose of construction, either before 1st April 1999, if loan is taken before 1/4/1999, then the limit will be 30,000 in case of self-occupied property. If loan is taken after 1/4/1999, 2 lakhs or interest paid, whichever is less, will be taken for the deduction. The remaining amount is called taxable income under the head of house property. Next we have here the third head, profits from business or gain from profession here. The first concept, net profit, whatever we have in our profit and loss account, that should be written here. For net profit, we have to add the amounts which have been debited to P&L account but are not allowable as deduction under the Act. They are saying that when certain expenses which are incurred in the business, which is not related to the business, that has been already deducted. So add back those expenses. Next, amounts not credited to P&L account but are taxable under the head profits or gains from business or profession. It is nothing but here certain expenses which are incurred by the business and those things have been not recorded. Now record such expenses. Next, amount credited to P&L account but are exempted under section 10 or taxable under other heads of income. They are saying that when in some of the time under profit and loss account, credit side we record agricultural income received or winning from lotteries, or even commission received on rendering services or any other part here, or like interest received on investments, interest received on government securities. Those things whatever we have recorded, that should be deducted. And amount not debited to P&L account but are allowable as deduction under the Act. They are saying that when certain things are there which are to be deducted as per the Act, that you have not done, you just record it now. That should be deducted over here. The remaining part will be our taxable income from business. Next we have here capital gains. Amount of capital gain under section 48. Add taxable allowances if any sales consideration, if it is there commission paid, add that one. The remaining less what we have here based on the section 54, 54B, 54D, 54EC, 54EE, 54F, whatever the section is applicable according to the Income Tax Act 1961, that will be allowed as exemption and remaining amount is taxable in the hands of the assessee. Next one, income from other sources, gross income whatever we have here, from that we are going to deduct tax deduction under section 57. The remaining amount is called taxable income under the head of other sources. Now the 5 heads income whatever we had here, income from salary, income from house property, second one, third one profits or gains from business or profession, fourth one capital gains, and fifth one other sources. Total of 1, 2, 3, 4, 5, that whatever we are going to get here. From this we are going to have less adjustment of set off and carry forward losses. If any losses are there, that should be set off. If anything is there, deduct that amount and remaining amount will be called as gross total income. From the gross total income, deduction under section 80C to 80U, chapter 6A, whatever the deduction that is savings you have made, that should be deducted, and certain deductions which are allowable as per Income Tax Act 1961 under different sections, what we have 80C, 80D, 80DD, 80E, 80L, 80G, like this we have plenty of sections under section 80C and other things. So those things has to be deducted here, and the remaining part will be a net taxable income in the hands of the assessee. This is how we are going to compute the total income. It is very easy, and certain things we are going to calculate and analyze those things in the next semester, but in this semester we are going to learn income from salary and income from house property in depth. In the 6th semester we are going to learn profit or gains from business or profession, income from capital gains, and income from other sources. This is what total income and computation of tax liability. So next we have here, this is a compulsory question for all the students, either BCom or BBA. It will be for 10 marks question. They're going to ask, briefly explain or mention the Incomes which are exempted under section 10, mention any 10, they're going to say we have here 20, we have here in that 20, you just write any 10, whichever is easy for you, those things can be written here. Any agricultural income earned in India, it is exempted under tax under section 10 subclause 1. Any sum received by the member of Hindu undivided family, that is exempted. Share of income from the firm, partnership firm, it is exempted from tax. Interest on non-resident external account, what we have, the new account we have, non-resident external account. On this account, if any interest is received, that is exempted from tax. Remuneration or salary received by an individual who is not a citizen of India. When I am not a citizen of India, if I receive any salary, that is exempted from tax. Any additional benefits or allowances paid by the government to its employees serving outside India. That is nothing but I am a government employee in India, but now at present on official work I have been for London. The amount whatever they paid, additional benefits are given for me to work in the London, those things are exempted from tax. Retrenchment compensation received by workman. So if any compensations are received by the workman during the service for certain incidents, that amount is exempted from tax. Payment received under Bhopal gas leak disaster, whatever it was added in 1985, that is exempted from tax. Compensation received in case of any disaster, that is exempted from tax. Tax on non-monetary perquisites, non-monetary benefits paid by employer, like for example, any computers are given or any other things which has been given by the employer to his employee, that is exempted from tax. Any sum received under a life insurance policy is exempted from tax during that particular previous year. Interest and withdrawals from Sukanya Samruddhi's account is exempted from tax, and this account is suitable for the parents who are having one child or two childs, girls, not boys here. A parents of a girl, they can invest under Sukanya Samruddhi account where they can get benefited and it be supported for the girl child at the age of 18 years, 20 years and above. It is good and it is better to have the save money, and even whatever the interest or the withdrawals made by the parents on the investment made on Sukanya Samruddhi's account, that is not taxable, exempted. Interest, premium or bonus on specified investments as per section 10(15), it is exempted from tax. Scholarships received by the students, it is exempted from tax. Any allowances received by member of parliament and member of legislative assembly, so it is exempted from tax. Any awards instituted by government, so that is not taxable in the hands of the assessee. Pension received by certain winners of glantory awards, so that is exempted from tax. Any income from local authority, if you are given any property for the local authority on a rental basis, if you receive rental income, that is exempted from tax. Any income from scientific research association, like in the same concept, if your property is let out for any scientific research association and if you earn any income on that, it is exempted from tax. Income of certain funds of national importance, it is exempted from tax. Income of registered trade unions, whatever the income earned by the registered trade unions, those things are exempted from tax. Income of child clubbed under section 64, that is exempted from tax. Any capital gain on compulsory acquisition of urban agricultural land, they are saying that one, if any agricultural land in the urban area acquired by the government and the government has paid the compensation for you, such amount is exempted from tax. Exemption of income of new pension scheme, whatever the new pension scheme under the trust what we have here, that is exempted from tax. Any exemption of income of a foreign company from sale of crude oil in India. If any foreign company is doing business activities in India of crude oil, that is exempted from tax. These were the exempted incomes. If I receive any one of this, it is exempted from tax. And in the examination, I have to write out of 25 any 10. So whichever is easy and you can remember, so those things can be written and score this marks whatever it is allotted for you people easily. So go through the concept, whatever we have discussed in today's session. In today's session, we have discussed about the gross total income as well as total income and even computation of total income. And even we have discussed about the exemptions under section 10, where if any income is received by an assessee during previous year, which are mentioned in the exempted income under section 10, 25 exempted incomes are there. Just go through that one. Those incomes are not taxable in the hands of assessee, and guide anyone or give better advice for the people by just getting the information of exempted incomes, whatever we have here. Thank you and namaste to all 5th Sem BCom students.